Welcome to this latest episode of Travel Daily News Asia Pacific, where we have an exclusive interview with Wong Kar Ling, Chief Strategy Officer and Managing Director Southeast Asia for Ascott Limited. I'm going to put questions up on screen, and Kar Ling.
Hello. Ascott today has 31 properties, both in operation and in pipeline, 26 of them in Bangkok, 3 in Sri Rachal and 2 in Pattaya. Ascott first entered Thailand with the opening of the Ascott in Sathorn more than 20 years ago. And since then, we have expanded from one brand, to now 7 brands, including, our namesake Ascott, Somerset, Live, Oakwood, Citadines, the Preference, and our Crest collection. And the latest, we're very excited to look forward to the opening, of our Le Clef, by the Crest collection in the second half of this year. Thailand is a very important market, for Ascott. A big part of it is due to its status, as Asia's most dynamic and sought-after destination, and also due to its rich, cultural heritage, and also the importance, of the market, in terms of as a gateway to the Southeast Asia region. Before I talk about the next phase of growth, maybe it's good to do a journey into the past about where we and how we came to where we are today. We actually started back in 1984 as an owner operator of a service resident in Singapore, and throughout the past 40 years, we have actually expanded from one brand that's focusing on service resident to now 14 brands that play across all price point, length of stay and purpose of stay. So very much, whether is it for business, leisure, for families, or for with your friends, or by yourself, whether you're staying for 1 day, 1 month, or across the year, we very much, have brands that caters to it. And this is actually a very important shift in our strategy, from just focusing onto long stay, to also tap on the short stay. And it is actually through what we call a flex hybrid model, where we design our product, to very much cater to both long and short stay. And our past 40 years growth has also been marked, from our shift from being an owner, of real estate to now, managing this real estate. So this asset-light strategy very much, allow us to grow a lot faster because we are no longer constrained by our balance sheet. So very much, we see ourselves today, as an owner of brands rather than an owner of real estate. And our past 40 years of growth is also complemented, by a series of M&A. I think we did, the acquisition of Citadines back in 2004, and a few along the way. And our most recent acquisitions, is the Oakwood back in 2022. So the Oakwood acquisition was done pretty well. We have successfully integrated them into our platform and grow, the portfolio by more than 30%. I think so. Looking forward, we very much, will continue with, our asset-light growth, as well as ramping up on our flex hybrid model. We're also looking into expanding, into the franchise space, and we'll also continue, in dialing up our M&A strategy, especially looking into markets, where we do have product as well as capability gaps. Southeast Asia is a very important market for Ascott, and in fact, Southeast Asia is the biggest region, for Ascott globally, followed, by China. So if you look at Southeast Asia, we have seen very good growth. So last year, we signed 36 properties, with majority of the signings, in Indonesia and Malaysia. And in the first 4 months of this year, we have signed 5 properties in Singapore, Indonesia, and the Philippines. We are very excited, about the growth in Southeast Asia. I think predominantly, driven, by where the market is today, and very much, the success of our Southeast Asia strategy is also largely due to what we call, a global local approach. We firmly believe, in investing in resources in market. So in our Southeast Asia region, we have a very strong, and a big in-market resources to support our properties. And with our 14 brands, and now expanding into the multi-typology, we do see a long runway for our Southeast Asia region. Yeah, so essentially, in a nutshell, a flex hybrid model very much allow us, to tap into both the long and short stays, and this very much allow us, to pivot, to the long stay when the market is soft, and then flex more into the short stays, when there's high demand. So very much our model allow us, to tap into different demand periods, providing a lot of resilience, into the asset, which is very beneficial, to the owner's perspective. So certainly for the owners, our flex hybrid model now coupled with our multi-typology, will help to optimize, the returns, of our owners' assets. And very much from a guest point of view, with, the ability, for our guests, to stay with us, whether is it for 1 day, 1 month, or a year, and also across our different, typology, we essentially allow our guests to stay their way. Sustainability is core of what we do, and we have actually launched what we call the Ascott Care program. And this program is really anchoring, on aside, from just achieving, the whole green certification, driving energy saving. Our sustainability program also extends into the community, where we very much also partner, with various community to drive, tighter collaboration. So in substance, our Ascott Care model wants, to do what is right, for the environment, and also within, the four walls, as well as, outside of our four walls, driving, the engagement, with the community and with, our guests at large. Okay, it's very much stay your way. Allowing our guests, to stay, wherever they want, whether is it, for 1 day, 1 night, whether is it for business, for leisure, whether is it with, their friends, by themselves, or with their families. And it is also about very much to our owners community, where we are able, to use, our brand offering to cater, to their different asset classes, and layering, our multi-typology with our flex hybrid model, enable, our owners, to best optimize, their assets and drive the highest returns.